Good afternoon. This is Tom Alexander. This is the weekend update for February, 19th, I think is Tuesday. The cash markets in the U.S. are closed on Monday. Today is Saturday the 17th. It is Saturday afternoon in beautiful Charleston, South Carolina. Okay, a couple of things. If you are finding value in these videos, I'd very much appreciate it if you would like them and if you would subscribe. You may have been notified of this video in a free newsletter that I send out. If you're not getting that newsletter, shoot me an email, tom@alexandertrading.com, and I'll put you on the list. It's free, and I don't sell your name to other lists and all this other stuff. Okay, so let's talk about the market. We are in a historic ramp off the October 13th lows. We remain in that ramp. We had a little bit of a perturbation to the downside created by CPI on Tuesday, but the market is shrugging off all information. All information at present. Everything is good news. There's no bad news. Let's take a look at the charts. And a few notable things, and I've been talking about this over the past few weeks, and really nothing has changed. The trend is definitively higher. We're making higher highs and higher lows. There's a very, very well-defined trend line you can see here, connecting these lows, and then the pivot lows are higher all the way up into including last Tuesday's very brief 2.5% decline. A hallmark of this rally has been the shallowness of the retracement so far and the lack of retracements. That's really more stunning than the fact that the market is up 23% off the October low. Now, this is a rate of change that is extremely unlikely to continue in all the indices. And I'll show another perspective in just a minute, the profile perspective of that. But, it's also, on the other hand, a market that is more likely to go into a trading range, rather a wider trading range, anything that we've seen since the October low, than it is to just invert V-top in some sort of crash. This is a bull market. The momentum is incredible, and the smart thing to do at this point is to be looking to buy it rather than selling it. Selling it is picking a top, and I can be guilty of that, I'll admit, at times, but this is a market that, regardless of any retracement over the next week or so or month, is likely to go higher. The least likely thing to occur here, in my opinion, is an inverted V-top. Now, what would change my mind about that? Well, if we start taking out these prior higher lows, and the first one is way down here at 49.17, and then 48.50-ish or so. And unless that happens, I'm assuming this market is going to work its way higher following any sort of retracement and balance consolidation that occurs. This is the SPX. Let's take a look at the other three primary U.S. trading indices. Here's the Index. The Index is clearly also, not surprisingly, it's trading in lockstep with the SPX pretty much. Higher highs, higher lows. The Dow, similar story. Higher highs, higher lows. And then the Russell is a little bit different, because the Russell tends to be a little bit different. Obviously, it's not driven by only 5 stocks as the others are at the moment. Now, the Russell started to show some life last week, and if we're going to have a strong bull trend this year, the Russell needs to continue to show some relative strength. It is bumping up against this level. This is the highs of last year, the December highs. And if the Russell were to close above this level, I think it could be very bullish immediately. This is an important level for the overall U.S. market. Now, the view I want to show you, this is the profile view, market profile. Now, market profile is nothing more and nothing less than a graphing format. It is a graphing format that highlights trade activity on the horizontal scale. It helps us to identify value or a lack of value as determined by buyers and sellers. There's no magic to market profile. However, you can look at a market profile graph and you can see certain characteristics that a market profile graph has. Now, this happens to be the weekly view, meaning each letter is quarter. So each letter is a week. Each profile unit itself is a quarter. Now, what is stunning about the third quarter and so far the first quarter of 2024, the third quarter of 2023, is the verticality. If I split this out, what we have basically is a bar chart, except a weekly bar chart, except the instead of bars, we have letters. But there's been very, very little rotation. Very, very little. You can notice the high volume nodes that are characterized in any time frame of a market profile chronologically defined set of market data. We're lacking these high volume nodes. There hasn't been one. The closest we've come, we've had a minor balance area that forms here. So sooner rather than later, you're going to have a more rotational market than what we're seeing. The market can work higher consistently, but it's extremely unlikely to continue higher at the rate of change that we've seen off this October low. Okay, let's view the technicals. Technicals are not particularly helpful at this point in time. What I mean by technicals, specifically NYSE data, I use the internals as sort of an indicator. The red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues, and this is breadth. This is information that is almost always more helpful in declines in bear legs than it is in bull legs. And bull legs, it's of dubious value. It's particularly of dubious value when you have a market that is driven by 5 or 6 or 7 stocks, which is the market we're in. So if I look at this right now, there's no tell, there's no strong takeaway from this. I'm just showing this because I tend to show it every week. But I'll tell you right now, there is no bell ringing information from this particular view. There are about a million if and or buts, and when you get into the if and or but territory, you're into random, useless data. So that's where we are. So guys, regardless of what happens over the next few days or the next few weeks, the trend is higher, and the simplest way to get a heads up that something might be changes is when, and it will eventually happen, the higher lows begin to be taken out to the downside. Of course, if something dramatic happens that changes my overall bullish view in the intermediate to long term, I will let you know. Have a great weekend, and I'll speak with you again soon.